500 are both below their 200-day moving averages. The NASDAQ has seen the deepest losses, down 3.33%, or a loss of 236 points. All 11 S&P groups are lower. Consumer discretionary, tech, energy, financial suffering the deepest declines. And take a look at the volatility index. No surprise, it has jumped in today's session. It is higher by 25%. And take a look at the 10-year yield, hitting the lowest level since February 9th. We're now at 2.728%.
Well, the oil market is closing for the day. Let's go to Jackie DeAngelis at the commodity desk. Jackie?
Good afternoon to you, Tyler. Well, crude prices taking a 3% hit about today as the equity market is making that sharp move lower as well. Fundamentally, crude has more reasons to move higher right now than it does to move lower. But oil is especially tethered to equities because the market thinks that equities pave the way for the demand side of the picture. Stronger than expected demand has been a bright spot for crude so far this year, seen as a way to soak up some of that excess supply. Take that away, the rebalance, of course, could fall apart. You can see crude here closing over $63 a barrel. Tyler?
All right, thank you very much, Jackie. And let's turn to the markets once again. A bearish start for April. That is sort of counter to the usual trend. The Dow has not fallen in April since 2005. And the S&P 500 has only fallen once in April during that stretch. And along with the NASDAQ, all three indexes are re-entering correction territory, the sixth decline in 8 sessions for each today. More now from futures and options trader Jim Iorio with TJM Institutional Services. Jim, welcome. Good to have you with us.
Thank you, Tyler.
What is the market telling you?
Well, there's a couple things we have to keep in mind, and that's that today's a holiday in Europe, and the volume was very, very low. Now, it's caught up a little bit in the last couple hours, as we would expect it to do in this big a move. To me, the first thing that tells me is this is a big deal, but it's not a huge deal. Yes, we're below the 200-day moving average, but I would need to see confirmation on a move like this for me to think there are 5, 7, 8 percentage points left on the downside. What I think this is telling me is that we're going to test in the S&P those 2 spike lows we made in February that come in about 25, 30. I think we'll test, maybe with the way it's going, we might even test them today. But there, I personally be a buyer. We have unemployment coming up at the end of the week, and then we have earnings coming up in a week and a half, both things that the market thinks will be good. So it's going to be hard to sell it off hard in the face of that.
When you don't have, when the leadership of a market, and the leadership I'm thinking here of Google and Amazon and Facebook and the like, when the leadership starts getting pummeled, is that especially worrisome, or takes a garden variety sell-off and into something more worrisome?
No question, and I think you hit on, there's 2 big things that's happening here. It's the transition from historically low rates to medium level rates, or whatever you call where we're going to, what the Fed has talked about, and the fact that the leadership, I mean, the NASDAQ itself had rallied 60% in the tune of 20 months. The FANG stocks shouldered much of the heavy lifting on that. So if they're falling into bad public perception, something needs to step up. Over the last couple of years, when one thing, the FANGs lost leadership about a year and a half ago, and bank stocks quickly jumped up. That hasn't happened this time. So yes, we need something. I mentioned bank stocks. I suspect that's what it's going to be, although I haven't shown any desire for it yet.
All right, Jim, thanks very much. Jim Iorio. Appreciate you being here. You bet.